Welcome back to Investing Talk Podcast. So today, we're looking at TTEC Holdings. And, you actually sent over a really interesting mix of stuff. It's kind of like a bit of everything. You've got news about a potential move to go private. There's their most recent earnings report. And then there's like this really in-depth due diligence analysis.
Yeah, a lot to unpack here.
Yeah, a lot to unpack. So our goal today really is to dive into all of this for you and try to pull out what seems most important. What should you be paying attention to?
Right. We have, like you said, a report about what's been happening recently. We've got a really thorough due diligence report that takes a close look at them as of 2025. And we've got an overview of the company itself.
Okay.
So these documents, I mean, they touch on everything. You've got a possible take-private transaction, you've got their detailed financial performance, and you've got their role in the customer experience sector, which is really interesting.
Okay, yeah, let's get into it. So the big headline grabber here, the thing that everyone's going to see is this potential take-private offer.
Yeah, that's right. So the documents, they show that the CEO, Kenneth Tuchman, has made a non-binding proposal to acquire the company, and the price he's put forward is $6.85 per share.
And that news, I mean, that caused a pretty big stir in the market, didn't it?
Oh, yeah.
I mean, the report mentions a significant jump in the stock price. It was like over 25% before the market even opened on April 2nd.
Yeah, it absolutely did. And importantly, the board put together a special committee to evaluate this. And they've already done some initial valuation work.
Mm-hmm.
And they've said, they're willing to keep talking to Mr. Tuchman.
Okay.
So it seems like this potential deal is something that we need to take seriously.
Yeah, it really does. And, it almost feels like this big news, this huge news about potentially going private, it might have overshadowed the company's recent performance. At least initially.
It's possible. I mean, if we look at their earnings, the report shows that for the fourth quarter of 2024, TTEC reported $567 million in revenue. But that's actually a 9.4% decrease compared to the same quarter the year before.
Yeah, so almost a 10% drop. I mean, that's a significant drop.
Right. And
it looks like they also didn't meet what the analysts were expecting, which led to, I guess, a bit of a decline in the stock price right before all this take-private speculation started happening.
Yeah, exactly. And looking at the full year 2024, their total revenue came in at $2.208 billion.
Okay.
And that's also a decrease, down 10.4% from their 2023 revenue.
Mm-hmm.
So, while this take-private offer, it's generated a lot of attention, fundamentally. TTEC is facing some headwinds in terms of revenue generation.
Yeah, so it sounds like even before this potential acquisition was even on the table, the financial picture was already facing some challenges.
Right.
So let's actually delve a little deeper into those financials, okay? Yeah. The due diligence report that you mentioned, that has some really interesting details, doesn't it?
Yeah, it does. So if we look at their revenue trend over the past 3 to 5 years, we start to see a bit of a story. So they did have growth in 2021, 2022, and 2023.
Okay.
But then, like we just talked about, there was this notable downturn in 2024.
So growth followed by kind of a sharp decline.
Right.
I mean, that certainly raises some questions.
It does.
What about their profitability? The report, it mentioned something about earnings per share, or EPS.
Right. So in the fourth quarter of 2024, their GAAP EPS, so that's the one that follows the standard accounting rules, was $0.10, their non-GAAP EPS. And that one tries to show a clearer picture of operational profitability, kind of excluding things like restructuring costs or one-time gains. That was a bit higher at $0.19. But it's always good to look at both the GAAP and non-GAAP because companies can choose what they exclude in non-GAAP.
Okay, yeah, that makes sense. And how about their valuation? Like, how does that look? I think I saw something in there about a price to earnings ratio.
Yeah, so as of 2023, their price to earnings ratio was about 16.5 times their earnings. Now, when we compare that to the average for their industry, which was around 18.2 times, it suggests that they might have been trading at a bit of a discount.
Interesting.
Relative to their peers. So that lower PE ratio could mean that the market already had some, reservations about their growth prospects even before this whole take-private offer came up. Do you remember seeing that in the due diligence report?
Yeah, I do. That's a really interesting point. Now, the report also points out that they have a pretty high debt-to-equity ratio. Can you sort of unpack that for us? Like, what does that mean and why is it important in this context?
Sure. So the debt-to-equity ratio, it's 363.6%. And what that number really tells us is how much the company is using debt to finance its assets compared to equity. So a high ratio like this, it's not just some random number. It means that a big chunk of their funding is coming from borrowing, which can be a problem if their earnings keep going down because it makes it harder to pay back that debt. And in a take-private scenario, whoever buys them,
Right.
they would also be taking on this big financial obligation.
Yeah, you're buying their debt too.
Exactly.
Okay.
And the report also mentions that this ratio has been going up, which is definitely something to keep an eye on.
Yeah. Yeah, that definitely sounds like a potential vulnerability. And,
Yeah.
You fall in this should definitely be thinking about.
Yeah.
Speaking of cash flow, the report mentions that they have negative operating cash flow. That's not a good sign, right?
No, not really.
I mean,
Negative operating cash flow means that the company's main business operations, they're not generating enough cash to cover their day-to-day expenses. So this can put pressure on the company to look for other ways to get funding, like maybe borrowing more or selling assets. So negative operating cash flow, that is a little concerning.
it is, yeah.
Does it say anything about how long they can keep that up or what their plan is to turn it around?
It doesn't go into specifics about how they're going to fix the negative operating cash flow, but it does. It definitely flags it as like an area of concern. However, the report also mentions that they have a pretty strong return on equity, or ROE. What does that tell us?
So the return on equity was 22.6% as of 2023. And that's actually a good thing. It shows how well the company is using shareholder investments to make a profit.
Yeah.
And the fact that it's better than the average for their sector, that's definitely a point in their favor.
Okay.
So kind of a mixed bag financially, right?
Yeah, it really is. Yeah.
Strong in some areas of profitability, but facing some challenges with revenue, cash flow, and they've got that big debt burden hanging over them.
Yeah, it really is.
Yeah.
To understand this a little better, I think we should probably talk about what TTEC actually does. Like, what is their core business?
Yeah, good point. So TTEC, they're a global innovator in customer experience technology and services, or CX, if you want to use the cool lingo.
Right.
And they basically work in the customer engagement management sector. So they help businesses interact with their customers better and serve them more effectively.
And they have two main parts to their business, don't they?
Yeah, they do. Yeah.
TTEC Digital and TTEC Engage.
That's exactly right.
Yep.
So can you break those down for us a little bit?
Yeah, so TTEC Digital, that's their technology side. So they're focused on things like contact center software in the cloud, that's CAAS.
Okay.
Or systems for managing customer information, CRM.
Right.
And they're also into integrating AI and analytics to make those customer interactions better.
Okay.
Now, TTEC Engage, on the other hand, that's where they provide these customized customer engagement solutions. So that could be anything from helping businesses get new customers to providing customer care. They even do things like content moderation and data annotation. Okay. So it's like digital is the technology, like it's the backbone.
Right. Exactly.
And then Engage is like the people and the processes that use that technology to actually do things.
Right. You got it.
Okay. That makes a lot of sense. So looking at how they've been doing recently, how did these two segments compare when it comes to revenue?
So in 2024, for the full fiscal year, TTEC Digital brought in $459 million.
Okay.
While TTEC Engage brought in $1.749 billion. So while digital is important, Engage is still the bigger part of their business right now.
Okay, so we've got a good sense of what they do and how they've been performing. But these reports, they also touch on some of TTEC's strengths and some potential red flags too. What jumps out at you?
Well, they do have some solid strengths. They've got this really strong AI-driven technology infrastructure, which allows them to offer some pretty advanced solutions.
Okay.
They also have a lot of expertise in the industries they serve, which helps them get predictable, recurring revenue from their clients because those clients trust them.
Right.
And they have a global presence. I mean, they operate in 22 countries, so they have a pretty big reach.
That's impressive. But what about the red flags? What were some of those that you saw?
So the biggest one, the one that really stands out, is that their revenue retention rate for TTEC Engage, it went down. It dropped from 95% in 2023 all the way down to 82% in 2024.
Whoa.
And the main reason for that is that a major client left one of their business lines, so they lost a big chunk of business.
Yeah, and that shows, even with all that expertise, losing a client like that, it can have a big impact.
It can.
So how does How does TTEC fit into the bigger picture? Like, who are their main competitors?
So they're in this really competitive market. It's the CX technology and services sector. And, they're affected by how quickly technology changes and by the ways that their clients are trying to engage with their own customers, which is always changing.
Yeah.
Some of their main competitors, you've got big companies like Accenture, Cognizant Technology Solutions, and Infosys.
Yeah.
They're all in that space.
Yeah. Those are some big players. So, how does TTEC try to stand out in such a crowded space?
Well, the reports say that their competitive edge is this combination of AI-driven technology and their deep knowledge of specific industries. So they try to tailor their solutions to meet their clients' unique needs.
Okay, that makes sense. So now, considering everything we've talked about, the financials, their business model, the market, what are some of the biggest risks and opportunities facing TTEC right now?
Well, on the risk side, there's the declining revenue.
Right.
And the general macroeconomic pressures that are probably affecting their clients' budgets. That's a concern.
Yeah.
And of course, there's that high level of debt, which adds financial risk. But the potential acquisition by the CEO, that could actually be an opportunity. It could give the company more flexibility to make strategic changes without having to worry so much about what the public markets think. And, just to mention it, a company like TTEC that operates globally, they could face some regulatory risks.
Right.
Things like data privacy, international trade policies, labor laws in different countries. So those are things to keep in mind.
Yeah, definitely things to be aware of. That potential for more flexibility as a private company, though, that's an interesting angle.
It is.
Let's go back to valuation for a minute. The due diligence report gives us a few more metrics to consider.
It does, yeah. So their price-to-book ratio, that compares their market value to their book value of assets.
Okay.
That's around 3.7 times. And the report says that this is actually a bit below the industry average, so that could mean they're undervalued. Their dividend yield was 1.8% in 2023. But it's important to note that they actually lowered their dividend per share down to $0.12 in 2025. And we have to talk about that high debt-to-equity ratio again. I mean, that's a big risk factor when we're looking at their valuation.
It is, yeah.
The report also reminds us about those regulatory risks, especially when it comes to data privacy and international labor laws.
Okay, so again, we're seeing kind of a mixed picture with their valuation.
Yeah, a little bit of everything.
So now looking ahead, what are some things investors should watch for in terms of TTEC's future?
Well, the reports mention a few things coming up, like they're going to be launching new products. One example is their blended healthcare digital sales model.
Okay.
And future earnings reports. Those will be really important to see if they can stabilize their revenue and improve their profitability.
Right.
And, of course, we'll have to see what happens with this potential take-private offer. That's a big one.
Yeah, huge.
Investors should also keep an eye on things like changes in regulations and anything happening in the overall market that could affect their clients.
So when we take all this together, we've got a company that's really focused on technology in a sector that's growing. But they're also facing some headwinds when it comes to revenue. And they have a lot of debt. And then this potential take-private offer.
Yeah.
That just adds another layer of complexity to the whole situation.
Yeah, absolutely.
And it's definitely had an impact on how people are feeling about the stock in the short term.
Yeah. And what's really fascinating to me is how the possibility of new ownership and the company's actual financial performance, how those two things play off each other. So it raises a really important question for anyone who's following TTEC. What's more important to you? The potential acquisition, or how healthy the business is right now?
Yeah, that's a really good question. We've covered a lot today. From the take-private proposal to the financial details, to TTEC's place in the market. We hope this has given you a better understanding of the key points from the information you shared.
I think so, yeah.
We always encourage you to do your own research. Go check out TTEC's Investor Relations page. You can look at reports from analysts to get even more perspectives. And if you found this helpful and want us to unpack more topics like this for you, please subscribe, like, and comment.
Yeah, we'd love to hear from you.
All right. Thanks for listening.